Welcome back everyone to the Audacious Money Witch channel where we talk about the magic behind the stock market. Jeremy's all hyped on Celsius stock, but it's been tanking. So what's the deal? Is Jeremy tripping or is he just way too premature?
I just started a position here very recently, and if we look here at the public account, so far in regards to Celsius, I have about 500 shares. I'm looking to increase that stake pretty dramatically over the next 3 months, as long as this one does stay in a lower place, which you got to keep in mind in regards to Celsius' stock price. This could go lower. This could go down to 25 bucks, 22 bucks.
In this video, I'm going to break down Celsius stock in a way even your grandma could understand. I'll tell you exactly where I plan to buy and why I think it's a good time to jump in. Once a total fave in the growth investing scene, Celsius seems to be losing its cool. Their insane growth numbers have slowed down majorly lately. In this video, we're going to break down what makes Celsius tick and figure out if they're just going through a rough patch or if they're actually losing their edge.
Okay, real talk. The energy drink game is facing some serious challenge right now. People are cutting back on spending because the economy is kind of rough. This chart shows how energy drink sales in the US, where Celsius makes most of its money, have slowed down this year.
Before this, energy drinks were killing it, growing like crazy year after year. But now it's a different story. The whole beverage market has been slumping since 2022. Even though things are tough, Celsius is still holding on its own and taking more of the market. In the last quarter, their retail sales jumped about 7% compared to last year, which pretty much matches how much more they sold. That's way better than the whole energy drink market, which only grew by 2%. Celsius is still crushing it with their products, even when things are slow.
Here's the weird thing that totally freaked out the market. The numbers don't match the hype. Q3 revenue actually tanked by a massive 31% compared to last year, and it was even worse in North America, a 33% drop.
Here's the deal. Celsius doesn't sell drinks directly to you. They sell them to distributors who then hook up with the stores where you actually buy them. It's how most companies in the fast-moving consumer goods world do things. Normally, sales into distributors and sales out to consumers should match pretty closely. But with Celsius, PepsiCo, their big distributor, overestimated how much they could sell. They thought things would grow faster, so they ordered way too much. Now PepsiCo has to get rid of all that extra stock, which is messing with Celsius sell-in numbers for a bit.
PepsiCo became Celsius' biggest player after they bought a piece of the company and partnered up in 2022. PepsiCo really helped Celsius grow. This partnership could be huge in the long run, like Monster and Coke. But right now, Celsius is too dependent on them.
Celsius thinks this is just a temporary hiccup and things will be back to normal by the end of Q4. As they said on their last earnings call, we expect sell-in and sell-through to match up soon. As investors, our main goal is to figure out if a company is just facing a temporary setback or if it's actually losing its edge in the long run. We think Celsius has the potential to be a winner. Let's dive deeper into why Celsius could be a big deal. So how does Celsius make bank? They whip up a bunch of fitness and energy drinks, all sugar-free. They were basically the OGs in this whole performance energy drink craze. These drinks aren't just caffeine bombs. They're loaded with stuff that's supposed to boost your metabolism and give you extra vitamins.
So here's the deal with Celsius sales. PepsiCo is the king. They are responsible for almost 60% of Celsius sales. Costco and Amazon are big players too. They are accounted for 12% and 8% of sales, respectively. Everyone else chips in. The rest is about 20% come from other partners.
Over 95% of their sales happen in the US. They're still just starting to expand internationally. Celsius is totally different from the usual suspects. They're like a rebel shaking things up in the energy drink world. Red Bull, the OG of energy drinks, has been ruling the roost since the 80s. They've stayed private this whole time, which just shows how insanely profitable this market is. Monster Energy is the only other brand that can really compete with Red Bull globally. Together, they basically control the whole premium energy drink game.
But here's the thing. Celsius is making waves. They're riding the health and wellness wave. And with PepsiCo backing them up, they're becoming a serious contender.
Okay, real talk, this market is brutal. Anyone with a decent following can basically launch their own drink. Let's be real, actually making it big is a whole other thing. You need insane marketing reach, constant innovation, a solid production line, and global distribution. That's a tall order. PepsiCo and Coke are the goats when it comes to helping brands blow up. But even they can't guarantee success. Look at Rockstar. They had a deal with PepsiCo, but they kinda fizzled out. Celsius definitely has what it takes to get people hooked. They're all about that healthy lifestyle, and it's working. But let's not get carried away. Monster and Red Bull aren't just going to sit back and watch Celsius steal their thunder. They'll definitely start pumping out more sugar-free healthy options to compete.
Plus, consumer trends change faster than you can say trending. It's too early to say Celsius has a guarantee edge, but they have made some serious moves, and they could totally become a major player in this booming market.
Let's get down to the numbers. Celsius's EVA, basically their true profit, has been skyrocketing in recent years as they ramped up production and got more efficient. The PepsiCo partnership really supercharged their profits, and now they're in the green. This totally backs up the idea that they're building a strong competitive advantage. Look at Monster Energy. Their EVA margins have been consistently awesome, like 15 to 20%. Celsius is now in the same league. We think this is a good indicator of their future profitability. We're predicting Celsius will have an EVA margin of 15 to 17% over the next 5 years, and their return on capital will stay above 30%. The energy drink market is booming globally, and the US is no exception. Even if Celsius stays their current market share in the US, they're still looking at solid growth. But the real money is in going global. Since they're barely selling outside the US, they're primed for explosive growth with PepsiCo's help. Monster Energy makes half of their sales overseas. That's the goal for Celsius.
Sure, building brand awareness in new markets will be a challenge, but they have proven themselves in the US. We don't expect their profit margin to get much higher as they are reinvesting everything back into their business to fuel growth. This strategy has paid off so far.
Overall, we're expecting Celsius to deliver solid returns for investors over the next 5 years. Think low to mid-teens. Right now, the market expects Celsius to grow its EVA, true profit, by about 7% each year for the next 10 years. That's not a crazy low valuation, but here's the thing. The market is basically assuming Celsius will just maintain its current market share in the US and grow with the overall energy drink market. They're completely ignoring Celsius's potential for huge growth internationally. It's like they're getting that massive upside for free. We think that's a pretty sweet deal.
So what's the verdict? Celsius ain't no Red Bull or Monster yet. Those guys have been dominating for ages. And let's be real, Coke and Pepsi are in a league of their own. But here's the thing. The PepsiCo partnership.
Pepsi okay?
Is Pepsi a grr? Did you just ask if Pepsi a grr?
Excuse me?
Of course Pepsi is a grr.
Is she saying okay?
Why aren't you understanding? A grr?
What kind of word is that?
Say it's Gaelic, like Akarai.
Okay.
No, it's a grr.
Oh,
Is that close? No.
Oh.
Okay. Okay.
Like this. Oh.
And the US success makes Celsius super interesting.
We're keeping an eye on two things. Can they keep crushing it in the US? Can they conquer the world? The global expansion part is basically free money at this point. If you want to load your boat, I will wait until $22 a share since this technical pattern. Do you know what this pattern is called? Join my investing club. I will teach you everything. I know. This right here is a diamond pattern, super bearish. This explains the price continuing to slide down, even after Jeremy sending his buyers in. So I will wait until $22 to pull the trigger, if you feel me. So what's the verdict? We think Celsius is a speculative buy for investors who can handle some risk. If you want quality, just buy Pepsi stock instead. Yes, I recently just bought Pepsi stock. If you want me to do a video on Pepsi, poke the like button to let me know.